Hey all, welcome to Share Track. This is Raj here. Friends, today I'm going to talk about Schrodinger. I have many topics to talk about because it's earnings season. The topic for this video is Schrodinger. I'm going to keep it very short, maximum around 5 minutes roughly, and to the point. In this video, when I talk about Schrodinger, I'm going to talk about their latest results. I'll also take the opportunity to comment about any of their pipeline items if it is looking promising. I'm not going to cover everything in the pipeline, just the promising ones which might be a positive catalyst for us. And having said that, before we proceed, please hit the subscribe button as we are very close to 5,000 subscribers, and your help can help us reach there very quickly. That said, let's get started. Welcome back, friends. Schrodinger disappointed with both on earnings as well as on revenue basis. The company had formed a nice cup and handle pattern and gained a lot of value since 17th of May. I was very psyched up and I was thinking to myself, why didn't we include this company in our watch list before? But I haven't done any regular coverage on Schrodinger. Today I'm covering it because what has come out in its Q2 results is a bit of a shocker. In fact, let me contrast everything with how Schrodinger has performed. In fact, if you had bought Schrodinger on the 17th of May, you would now be sitting on a gain of 129%, touching a peak of $59.58 on 11 July 2023. In my opinion, it was still forming a bullish pennant, moving sideways in anticipation of results. Post results, the share has had a major gap down and dropped 23%. And friends, as I tell you in technicals, a gap down is a positive thing because then you are forced to go up, and a gap up is something which is a bit of a risk because you're forced to come down to cover the gap. So in technicals, we always assume that every gap has to be covered. So the covering of this gap is going to be a positive. That's the way I would like to look at it because I'm a glass half full person. I look at the positive of everything. In their earnings report, they reported an EPS of minus 0.79 cents against an expectation of minus 0.508 cents. And this is a miss of close to 50 or 55% approximately against expectations. Also on the revenue side, they came in around 8% below expectations of 35.19 million against expectation of 38.27 million in revenues. So on both counts, they disappointed. Revenue miss was also pretty big. $3 million is a lot. And as per that report, as at June 30, 2023, Schrodinger had cash and cash equivalents, restricted cash and marketable securities of approximately $554 million compared to approximately $458 million at December 31, 2022. We should remember that this includes around $143 million received in Q1 2023 from Nimbus Inc. when Takeda took over the subsidiary of Nimbus Inc., which is called Nimbus Lakshmi Inc. So that is that 143 million sitting in that number, which we are seeing today in the latest earnings release. Here are some key highlights from what the company had to say about their ongoing therapies. There are a few mentions out there, but the only one I thought worth mentioning here was that Schrodinger announced FDA clearance of its investigational new drug or IND application for SDGR 2921, the company's investigational CDC7 inhibitor. SGR 2921 has exhibited strong anti-tumor activity on a monotherapy and is combination and also in combination with standard of care agents in multiple preclinical tumor models. The company expects to initiate a phase 1 clinical trial this year, and the study is designed to evaluate the safety, pharmacokinetics, and pharmacodynamics, and determine the recommended dose of SDR 2921 in patients with acute myeloid leukemia or myeloid dysplastic syndrome. And this is a positive catalyst in my opinion. However, in the stock market, financials are absolutely supreme. And if you miss in financials, both revenues and earnings, it's very difficult for any other non-financial catalyst to pull up the company. So this positive catalyst could not salvage the stock price. So that's the only highlight I have from their progress report on the various pipeline items. And here is an analysis of their Q1 financials as contrasted with Q2 of 2023. So I have taken the Q1 from before and Q2 from now and made a table. So you can look at this table out here, and here are the key points of improvement or deterioration. So total revenue, if we look at the total revenue, the company experienced a decrease in total revenue down from 3.3 million, which could be a concerning factor for many investors. And when it comes to drug discovery revenue, the most significant drop was observed in drug discovery revenue, decreasing by $2.7 million, which may raise concerns about the performance of this particular segment, which I think is a major segment for Schrodinger. Software gross margin, despite the overall decline in revenue, there was an improvement in the software gross margin, which is a positive sign, indicating better profitability in the software business. Operating expenses increased significantly by $14.3 million, which could be a potential point of concern, as it may impact the company's overall financial health. Other income for the company could be summed up as saying that the company achieved a remarkable improvement in other income, gaining $49.2 million, mainly due to changes in the fair value of equity investment and interest income. This substantial increase contributed to the overall net income improvements. This is over and above what they got from Nimbus Lakshmi Inc. And when we talk about their net income or loss, the company managed to turn around the financial performance, going from a net loss of $47.7 million in Q2 2022 to a net income of $4.3 million in Q2 2023, demonstrating a significant positive transformation in profitability. And in fact, they were rewarded for that with the cup and handle pattern, meeting and exceeding the targets and gaining significantly. But the gap down is a result of what has happened in the Q2. Overall, the second quarter shows mixed results with a decline in total revenue and drug discovery revenue. However, there are positive aspects such as an improved software gross margin, substantial growth in other income, and a significant net income improvement. However, substantial growth in other income is not something that can be relied upon, and the company has to make more income in its area of core competence. I think overall, it's not that encouraging, and it has been reflected in the drop in the share price in the market. The increase in operating expenses, however, should be carefully monitored to ensure sustainable growth and financial profitability going forward. And that's what we'll do in this channel. We'll keep monitoring that. And next, let us look at their price chart before we come to conclusions. And if you look at the price chart here in the TradingView platform, you can see that here we are in the TradingView platform, and you would see the entire gains that it was rewarded with after its excellent performance in Q1, growing revenues and everything. But the expectations were built up significantly, and on the run up to the results, we saw that ever since 19th of July, the market was moving sideways, making a bullish pennant. And I always thought that because the bullish pennant is on a raising trend or a bull trend, it should break out on the upside the way it did here earlier when it broke out from the bullish pennant on the 13th of June 2023. Unfortunately for us, the results were not very good. And as you saw, as I mentioned, the results were all negative. Both the earnings per share and revenue came way below expectation. And therefore, there is this huge gap down. And the drop is close to 22.29% as we are recording. And also you can see that the momentum has dropped significantly, and MACD is absolutely bearish. So I'm expecting that there will be a little more bleeding tomorrow, and then the share will start moving sideways. We still have a bullish line of support out here, which is this diagonal green line. And then we have another diagonal green line, which I can extrapolate, and that can also give support. And also this particular green line would likely give support going forward. So we have 3 lines of support. So I'm thinking that Schrodinger, one bad result, one bad quarter should not damage Schrodinger too much, but high expectations were dashed, so it has been punished a little bit. I'm expecting that by the time we come to Q3, Schrodinger would have recovered most of the losses and filled up the gap. So that's my expectation out here. And I would now like to ask you a question about Schrodinger. Please just use Y or N in the comment section to answer my question. Do you think Schrodinger will recover and gain momentum before Q3 results? That's all for now, my friends, and I'll see you in the next video. Bye for now.